to forward thinking with Vitality. Because the world is moving fast, the world of protection also needs to. Thank you very much for joining us today as we delve into changing the conversation, why protection needs to do more. So I'm really pleased to be joined today by two industry legends, Vitality's Director of Strategic Partnerships, Andy Philo, and LifeSearch CEO, Debbie Kennedy. Thank you so much for joining. So in a moment, we'll be getting stuck into the topic and delving into a bit more detail in the current state of protection market. We'll also be bringing you the latest data from our VitalityLife Claims and Shared Value report, which we published this week. I'll then turn back to my guests and we'll unpack some of those findings and again explore the sort of current state of the market, claims and those things before jumping into a live Q&A. So do make sure you get your questions in. So to kick things off then, Debbie and Andy, I'm going to come to you first. Debbie, give us your assessment of the kind of current state of the protection market. Where are we?
I think we've been where we've always been for a long time. And so look, we have decent products, we have good value, I think, in terms of the prices for those products, and we have strong claims payment rates, which we'll touch on. For me, I think the issue is that if you'd asked me that question a decade ago, I would have just said exactly the same thing. So we always seem to be in the status quo, I think, and not really breaking forward. We've seen overall sluggish growth in recent years, yet moved up a couple of percentage points in the latest stats. Some exceptions to that, so I'm sure Andy will talk about it. But it feels like we're still doing the same thing, protecting the same type of people. I think for those that are generally healthy, they can get protection in a very fast and efficient way. But for me, there is a lot more consumers that we're just not getting to at all. The Financial Conduct Authority, the FCA, their own survey says, I think overall there's only about 43% of adults have any form of protection. Wow. For life insurance, that's just 30%. And I think there's a danger for us, you talk about needing to move fast, is in that decade, consumer lives have changed so much. How they access other services, how they share data, how they want to be served has changed. And I don't think we've moved beyond a legacy model in protection. I think we're still using mortgage sales as the prime reason to talk to people, and there is clearly many customers that do not come to us via that route. So yeah, it's okay, but it's been like this for a while. Yeah,
definitely could be better. And Andy, from your perspective, what's your kind of assessment as where we are as an industry?
Yeah, so the market has historically been pretty flat, really, although we are starting to see, I think, some shoots of recovery. If you look at some data published by NMG, who are a research consulting and insight organisation that we work with, if you compare Q1 2024 with Q1 2025, you'll see the market's increased by about 6%. Which is encouraging, I think. What we've actually seen at Vitality, we've had significant growth over that period. We're up about 57%. So what you're seeing is some growth in the market, which is good. You're seeing fewer cases, but actually bigger cases, and I think that's probably down to advisors really embracing multi-benefit sales. So we are seeing more bundled products, a life cover with serious illness cover or life cover with income protection. And in fact, income protection has been a big winner. So that's up about 6% over that same period. And Vitality's growth has been exceptional in terms of IP. We made some big changes to our product last year, but we've seen 112% growth in IP sales over that period. I think the growth in IP is largely down to some great work by the industry. IPTF, I think, deserves a special mention, really forging ahead in terms of the promotion and understanding within the market around the IP product. I think the networks, we work with all of the major networks and large distributors are really embracing IP, seeing that as the foundation sort of stone of financial planning.
Yeah.
So that's sort of quite promising.
Just touching on something you mentioned there, Debbie, around there is this, we think about the last 10 years and the kind of the market growth over that time. I mean, obviously we've had stuff like the pandemic, which I think we all perhaps thought was an opportunity.
Exactly. I mean, you think, you know, you couldn't have had, you know, a better opportunity to make our industry feel more relevant to people's everyday lives, and we saw that. We actually saw, you know, the engagement were raised, and I think what was really interesting, people suddenly, I think, had that shock about how fragile their income was, and I think that's what we're seeing now, some of that continued, you know, sort of experience and people wanting to protect their income. We've also seen, you know, post that, you know, really people now waking up to the state won't just provide, and the NHS, and people much more acutely aware of how difficult it is to get a diagnosis, speedy diagnosis, to get into treatment. So I think we've had so many prompts as an industry to say, look, there's never been a time where we are more relevant and more needed. And yet it has been, you know, a bit disappointing that we've gone up and then we've sort of come down again, apart from a few, you know, little spikes there. And I think that that's the danger, you know, are we just reverting back to, well, actually, we kind of know how to work this. We you know, this market works okay for us. We don't really need to do much else. And I think the real worry is that if, say, we think that as a market, you know, our customers will start to look elsewhere because they have these needs. It's not that the needs aren't there. The danger is we just won't be the ones to serve them.
Yeah, absolutely. I suppose, you know, there's that sort of famous saying, the definition of insanity is doing the same
thing
over and over
again and
expecting a different result. But one of the other points you mentioned is, and I think is really important, is that over the last 10 years and beyond, and maybe accelerated by the pandemic, is that people's lives, though, have changed enormously. And to some extent, as you say, as an industry, we're still very geared towards a sort of traditional way of people buy a house, they have a family, and all this sort of stuff. You know, given that, how do we reach consumers now that are leading totally different lives? They're, you know, they're buying houses later in life, or not at all. They're renting for years. They're not having children, they're not getting married. They're drifting in and out of work, they're travelling. How do we engage with consumers in that world?
I think one of the key things at LifeSearch, we've done quite a lot of research into this about, you know, our customers, but also our future customers, because I don't believe, you know, a lot of the younger demographic will resonate with some of the brands that we think, you know, hold true today, you know, some of the insurance brands. And they've much more affinity with different types of brands where they engage every single day, you know, they are engaging either on their phones or in some digital way. So I think one of the first things that we look at is partnerships. I do think that there is an absolute opportunity for working more through consumer brands and reaching customers in a different way, not necessarily waiting for a life event that may or may not happen now. And so we talk about embedded insurance, and that's happened to a much larger extent, I think, in general insurance. And it started off very much, you know, sort of low value but high frequency type of insurances, micro insurances. And, you know, it used to be that, you know, particularly in Southeast Asian market, you could be in the taxi on the way to the airport, and in the back of the cab would be an advert for, you know, travel insurance or flight delay insurance, and you'd think, right, you know,
I love that. It's just sort of being where the customer is.
It's exactly
rather
that.
Than waiting for them to come to you.
And that's, you know, that's what we mean by embedded. It's actually showing up where they are, and I think for me it's about showing up with brands that they are already engaged with and brands they trust as well. So that may still be, you know, financial brands, but it may not be the traditional banks or building societies that we know today. It may actually be retail brands that you do, or lifestyle brands as well, or what we're seeing in particular, you know, again for that younger demographic, it's things like the rental agencies, you know, people having to engage quite strongly with them now to actually just get on the ladder to get a flat and rent. And actually they're being packaged up, different other support mechanisms. Why can't protection be part of that?
And I guess, Andy, it's a little bit kind of what Vitality does.
We have a very distinct and strong core purpose, which is about enhancing and protecting people's lives, making people healthier. And that generates value back to consumers. So I think consumers expect, demand and deserve ongoing value from their engagement. Whatever company, not just insurance, but I can only really speak about insurance. So we do that through generating value through our rewards program. And I personally think it's morally wrong to contract with a client for 10, 20, 40 years, the whole of their life, depending on that policy, and just hope they don't claim. I think we should encourage people to not have to claim. And let me be clear, if there's a claim, then we need to be there, and we will be there, and that's the proof point, I guess, really.
We had Consumer Duty, which to some extent has kind of hopefully driven a little bit of that awareness that you should be having protection conversations. You know, and you touched on a moment ago, is protection is absolutely, it's critical, isn't it, for so many people? It's such we can't.
It is, and I think there's a danger. You know, you're in a world industry like myself for years, and you think in a certain way, and we think in product lines. You know, many of our insurers are, you know, that their whole, you know, organisation design is in different functions, investment, savings, protection, often the smaller one of it. And I think that unfortunately seeps through in what we present out to customers. So they have to, you know, they go and see a mortgage advisor, but they might not necessarily get the conversation about protection. They talk about their wealth, but they don't actually talk about, well, actually one of the biggest things to protect your wealth in later life might be that you stay in work longer, you know, that you're earning more. And you can service these debts that we know a lot more people are taking into later life now. Certainly mortgages are becoming much more longer term. But we don't talk about it that way. Or we talk about products only. And one of the things I've really, I think, noticed when I moved into distribution is the customers, when you talk to them, do not think about that. They rarely come on and say, I think it's critical illness, accelerated life cover that I would like, please, with some partial cover. What they've done is they've heard a story from a family member or a friend, or they've experienced it themselves, and they think, well, what would happen if, you know, we were to lose our income, I was to be seriously ill, I couldn't care for my parents or care for my child. And I think the advisors and LifeSearch and others to have to do a really good job at servicing that need. And I think what we could do more of it, it's exactly as you say, Andy, we've got our base products. I think we spent a lot of time as an industry having add-ons, so they've become bolt-ons. I think what Vitality has done very well is it's become quite more of an active insurance solution. You know, there are lots of ways that you can access Vitality. You don't have to necessarily think, well, it's this event and I can only talk to you then. And I think as an advisor, being able to talk about that with customers is much more meaningful. It's almost saying, well, you know, you're covered for this. If that happens, if you really just need a bit of advice or a bit of rehab or some support as you're trying to find a speedy diagnosis, that's there for you as well. So I do think there's a real opportunity to think out, not to be so product-centric anymore, and think about the customer needs.
I think that probably, at this point, just tees it up, just for us to bring you a brief overview of some of the data and findings published, as I said, this week in our VitalityLife Claims and Shared Value Report. So we'll just bring you that now.
Being there for your clients when they need us the most is of course at the heart of what we do. I'm proud to say that in 2024 we paid out a total of £142 million in claims across our life, serious illness and income protection cover. As our VitalityLife Claims and Shared Value Report demonstrates, we're continuing to move protection forward by providing real value, cover that helps clients live in better health, and more relevant protection that meets people's changing needs. Looking at our data, there are three key themes coming through strongly in the report. The first key theme is how life insurance can be a tool for living a longer, healthier life. They say that life is for living, and we believe it should be no different when it comes to protection insurance. Not only does Vitality provide financial support when it's needed most, but can also help clients live healthier and for longer, reducing the risk of claim while enhancing the value of cover throughout the lifetime of a plan. This proactive approach is redefining how we think about protection. It means that clients are not just covered when the worst happens, but they also benefit from a behavior change program that delivers immediate value from day one, long before a claim. We have over 30 years of experience in this area, and the evidence laid out in our latest report speaks for itself. Quite remarkably, we can now evidence that members actually improve their life expectancy by up to 5 years with Vitality. Here are just some of the ways that we made our members healthier in 2024. Our members completed over 600,000 health reviews and 50,000 health checks, tracked 1.2 trillion steps, logged 6 million gym visits, and in return we rewarded them with 1.1 million cinema tickets, 2.9 million handcrafted drinks from Cafe Nero, and 1.5 million healthy food baskets from Waitrose, and much more. In total in 2024, we returned £99 million worth of value to members through discounts and rewards provided by Vitality partners. Much more than just added value or a tick box approach, the Vitality program is about helping clients build healthy habits and sharing the value this generates back to them through the rewards and partners. It works too. Members who get active through the program reduce their risk of death by up to 57%, and even members who are active for 1 or 2 days a week still see an increase in life expectancy of over 2 years. And this is true for all ages. It really is that every little helps. The second key theme of the report is how we're doing far more than just added value. At Vitality, our shared value approach to insurance has always been about delivering tangible value to clients that benefits them, us, and wider society. This is best demonstrated by Optimizer, which allows clients to enjoy our lowest premiums, unlock great rewards, and benefit from a longer, healthier life. This is shared value in action. We also find that because Optimizer enables clients to access cover at our best available premium upfront, it helps to ensure the clients have more comprehensive cover in place. In 2024, they were 58% more likely to take out serious illness cover and income protection. Meanwhile, they had levels of cover 10% higher than standard plans. And because Optimizer unlocks full access to the Vitality program, it's also able to generate further value through the full range of rewards and partners. In fact, in 2024, members with Optimizer saved up to 40% of their annual premium through the benefits and rewards of the Vitality program. They're also twice as likely to engage with their plan, which as a result helps to generate additional touch points for advisors to strengthen client relationships and leads to higher persistency. At a time when value has been in the spotlight due to consumer duty, and we hear a lot about added value in the protection industry, we believe that Optimizer can be game-changing for financial advisors. The third theme is about providing relevant cover for modern needs. In our rapidly changing world, it's critical that protection products move with the changing needs and expectations of clients to remain relevant. In recent years, we've seen the way people live and work shift considerably, whilst advances in medical science and wider health challenges all call for a rethink of how protection works. At Vitality, our protection products continue to respond to these changing customer needs, as reflected in our latest claims data. Take our serious illness cover, for example. People are living longer, but are increasingly exposed to multiple illnesses over their lifetime. This includes later life conditions, such as dementia. That's why Vitality serious illness cover is not like other critical illness plans. In 2024, 1 in 5 claims were paid for conditions not covered by core critical illness plans, and 1 in 7 serious illness cover claims were paid for conditions not covered by the typical enhanced critical illness plan. Addressing the growing need for later life care provision, 150,000 members are also now protected with our unique dementia and frail care cover. For our income protection, meanwhile, almost 3/4 of claims were for illnesses covered by an enhanced recovery benefit, which provides access to private healthcare pathways to claimants to help them return to work sooner. All of this means they're not just delivering more comprehensive forms of cover to clients, but also ensuring it meets their changing needs as they evolve.
Look, some really interesting findings then. If you've not had a chance to read the report yet, there is a link in the handout section on here, so you can download it and have a proper detailed look at it in your own time. Just to remind you as well that we will have that live Q&A with Debbie and Andy at the end, so do make sure you get your questions in, share them in the QA section again on the webinar. Well, look, As I said, some really interesting stuff to unpack there. We've spoken about, and as evidenced in that report, there's those sort of three themes of better value, more relevant cover. We see through the program kind of prevention. One of the things I think was quite interesting there, Debbie, is we were talking earlier on about those different sort of touch points, those ways we can engage your consumers. Obviously, one of the things with the program is all the different rewards and benefits that our members can use and engage with. That sort of speaks a little bit to what you were talking about earlier on around the kind of embedded those sort of touch points of consumers.
I think it does. It just shows you that, with the right partnerships and brands, just how you can engage customers. And I think Vitality's done that so well. I think actually for Vitality there was often maybe a misconception at the start, well, it's only for healthy people who, do so many steps every day. And I know very much now that's not the case. And our advisors have certainly learnt that they can make it very relevant for anyone who has all certain degrees of fitness or activity as well. There is a way for them to engage with the benefits of Vitality. And I think, we see that so people sometimes just self-selecting out thinking, no, I'll never get cover. It's not the case.
Yeah, absolutely. And Andy, I suppose there is an element as well, isn't there, as an industry where we can perhaps be playing a greater role in also just helping people to live in better health. There's a really important, given some of the health challenges we face as a country, alongside the other economic and financial challenges, there's more we can perhaps be doing as well to prevent illness. I think that's reflected in some of those stats.
I mean, it's really pleasing to hear some of those stats come through. And I'm particularly proud to hear those come through as well, because I've been with the company pretty much from the start, about 18 years or so. And I remember going out to see advisors talking about our program, and the common sort of feedback was, it's great, Andy, but it's a bit gimmicky, isn't it? And I think it's really clear from the scale and the number of benefits, rewards that we're giving back to consumers now. This is far from gimmicky, and it's got real tangible value. So that's really, really pleasing. I think the fact that we're actually making and paying unique claims, as referenced in the video, is just something that's really, really powerful. So covering some of the conditions earlier, where other insurers wouldn't have done.
Yeah.
And I think the other point really is that the real proof point that it is possible to live longer with Vitality. So, up to 5 years longer if you're engaging in the program on a regular basis.
I love that stat.
Yeah, no, it's great. And it's actually underpinned as well by solid data.
Use that,
Yeah, it's actually underpinned by 465,000 lives data that we actually use to collect that. And it's also peer reviewed by the London School of Economics, so it has real intellectual validity to it. So I guess the question really is around prevention, and somebody said once that prevention is better than cure, and that's absolutely right. I quite often reference some research done by the Oxford Health Alliance. It was quite some years ago now, but it's still absolutely relevant, that they produced 4-4-60 model. It was 3-4-50 model, but the 4-4-60 model. And basically they say that there's 4 behaviours, so activity, poor diet, smoking, and the fourth one they added was alcohol abuse. So those 4 behaviours lead to 4 conditions, chronic conditions. So it's respiratory disease, heart disease, cancer and diabetes. And those 4 conditions lead to over 60% of deaths worldwide. And their point really is that those 4 conditions are modifiable.
Yeah.
So we can change those. And that's exactly where Vitality come in my view. Is what we're trying to do is encourage people, and it's not mandatory. And it's really pleasing to hear Debbie say that Vitality is not just for the fit and healthy. That's the common objection that we get out in the field. And we're just trying to encourage people to understand their health, first of all. And we help them to do that through a range of techniques. And then they can decide what they want to change. So whether you want to lose weight, whether you want to exercise more, whether you want to quit smoking, eat a bit more healthier. And we've got programs and plans designed to support all of those. And then the key thing is we reward people for doing those things. And sometimes those are small rewards. It's just like a little behavioural reward for doing something well. And then sometimes they're bigger rewards. So that's the whole sort of ethos behind what Vitality is trying to do. So, the proof point is at that claim. we need to be there,
Yeah,
and we will be there to meet that claim. However, we want to try and encourage people not to need to make that claim.
Yeah, and this, it sort of inverts the idea of insurance a little bit, doesn't it? Away from the promise of a payout to, actually you're now getting something up front. And I guess, does that can help advisors, I suppose, have a slightly more positive conversation with the client?
Yeah, I think absolutely, because otherwise you're actually selling on fear. You're selling on, well, what the worst thing that can happen, if you die, and I think that there is much more, to be gained by saying, actually, it's active insurance, it's adaptive insurance. It will be there when you need it.
I think as we kind of draw to a close of this section, just a reminder, we'll be jumping into a live Q&A in a moment. So if you've not shared any questions yet, do, because there's still plenty more to unpack here. I think just for a couple of final reflections. So, today we've sort of pitched this as changing the conversation and why protection needs to do more. Debbie, if I could just ask you, kind of, any advisor tuning in today, what's sort of some of the practical things they can perhaps do to kind of build on some of what we discussed and maybe start having those take their conversations a step further with their clients?
I think what we're learning and spending time doing a lot of research is, one, that a customer coming in to think about protection often isn't an instant decision. They've been thinking about it in some cases for about a year before they're ready, but it's often been driven by their own experience or experience of family and friends. And I think that what we're learning as advisors in the way we engage is to we always ask the same question at the start of every conversation: what's brought you here today? So really start to understand what it is that they're looking for, and not necessarily jump to, we've got a product solution. I think also don't fear that price is everything. Affordability is key, but value now is really something, and consumers are doing that in other sectors. They are looking for trust, they're looking for reviews, they're doing exactly the same for us as well. So I think the more that we can be armed with stories, with trust points, proof of claims, etc., that this will work for you, I think really does help advisors. I think maybe the final thing, we have been led very much by rating houses and platforms over recent years. I think what we're trying to do with LifeSearch is take that away from just being quite an internal advisor tool to actually, how can customers use it as well? How will it help them feel confident in their purchasing decision as well? So I'd love to see that come to the fore.
Yeah. And Andy, any final thoughts from you?
Yeah, so I would say to advisors, really believe in the power of the sale of protection. I mean, there is nothing, I don't think, more powerful than you being able to provide that client who has experienced maybe a devastating incident, condition, illness, or whatever, and you're able to provide them with the financial safety net that the insurance policy that you recommended will provide. So that's a really, really powerful message. Add some key questions to your fact find, whichever way you actually run that process. We've got a really large business consultant team across the country, so we've got over 100 business consultants throughout the UK who are local and can provide support and training to help you, guide you through those processes and help you to develop your business. I think, look, it's fairly obvious that, the state's not going to provide to the extent that everyone would really want them to. So a couple of stats that I've got here. So 1 in 10 people working age are now claiming sickness or disability benefit. And we're now spending over £20 billion more than we were pre-pandemic on sickness and disability benefits. But so that's getting bigger. But I think, and it's the best form of defence on that, I guess, is self-preservation, is self-provision.
Yeah.
And the fact that the advisors can offer a policy solution to clients at an affordable price is a really strong message, I think.
Yeah, absolutely. So, clearly big opportunity, need for a bit of innovation, a bit of fresh thinking, but definitely, some opportunities there over the years ahead. So, look, at this point, we'll wrap up with Andy and Debbie, and we'll jump into a live Q&A where you can have the opportunity to put your questions to us and we'll hopefully try to answer them. But it just leaves me at this point to thank Debbie and Andy. Thank you for joining me so far. See you on the live Q&A. Good morning, everybody. Thank you very much for joining us today for our next section of the webinar live Q&A. So really pleased to be joined this morning with Andy and Debbie as we continue the discussion and kind of delve into this topic in a little bit more detail. So please do share any questions you have. I can see a few questions coming in already. Do share any questions that you have in the chat. So morning, Andy and Debbie. Great to have you with us today.
Morning.
Morning.
I'm going to kick things off here. So somebody's asked a question, which I think just sort of follows on nicely from what we've been talking about there, around kind of having conversations with clients. So, we're talking about changing the conversation, which is all well and good, but what's the best sort of conversation? What's the best way to kind of initiate a conversation with a client when it comes to protection? So Debbie, I'm going to come to you first on that. How should an advisor, sort of kick off a conversation with their client?
Okay, thanks, Rob. If I talk about LifeSearch advisors, one of the things that we always do is try and get them to open up first of all. And the question I hear most often our advisors asking customers is, what's brought you here today? Now, our world is slightly different because we're often dealing with customers that have been trying to buy online on one of the price comparison websites, and it would be very easy, the advisor can see what products they've been looking at, they can see what quotes they've had, and it would be very easy just to go to, I can see you're trying to get some term assurance. But instead they always start with, what's brought you here today? And I think that question just takes you to different places. You'll either hear about there's something happened to a friend or a family member and it's made them think, what would happen if I, the worst happened, died or became ill? Do I have enough protection? And often then it's an event, it is because they are buying a house, they've suddenly thought about it, or that, they've had a new family member. So I think the first thing, Rob, is just try to get the story, really get the story from the customer.
Yeah, I love that. I think it's such an important point to make around kind of, I think, sort of avoiding that kind of order taking, which channel you down a bit of a product route and actually can end up with quite a narrow focus. So I think, really, really good point. Andy, from your experience, kind of how can advisors kick off that conversation and actually just discuss protection in the first place?
Yeah, hi Rob, hi everybody. Thanks very much for joining us today. So first of all, I think you have to commit to actually talking about it, committing to actually having that conversation. So I think something like if you were to suffer a serious illness or lose your income, so due to long-term sickness, would you like to be protected so that you can maintain your final position? And then relate that to, would you like to keep your house? Would you like to pay your bills? Ensure your children can go to school trips. I know when I was a young father, when I put in policies in place for myself, I was always thinking about wanting to make sure that if anything happened to me, the worst would happen to me, that my children could still go on school trips, would still have, good birthdays and Christmases and those sort of things. And that was the sort of the provision that I was making. So it's really just about painting pictures and asking questions around events and the impact on what that would have on an individual. So quite simple questions. And you could extend that to, would you like to get something back from an insurance policy? So relating it specifically to what Vitality do. So if you didn't have a claim and the worst wasn't happen, because there's this bias that, people think things won't happen to them, would you like to get something back from an insurance policy, but still have that protection alongside you? Yeah,
really. Because I suppose, Andy, there is this challenge, isn't there, of people are naturally optimistic, which is a good thing. It sort of gets us through life being, having a degree of optimism, but people are naturally optimistic. And so consequently, the problem we face as an industry is people don't think things are going to happen to them. So, one of the sort of themes of our newly published life claims and shared value report is that, peace of mind alone maybe doesn't quite cut it. So just sort of taking this question a step further, if, we know there's a big protection gap in the UK, there's, millions of people don't have any cover in place. And therefore, if something did happen to them, it'd be in a pretty tricky situation, to put it mildly. given though that peace of mind isn't convincing people, I mean, how can thinking a bit differently about kind of upfront value, some of the ways in which, Vitality is thinking about protection a bit differently, how can that kind of be used as a bit of a trigger to maybe get more people to be sort of convinced by some of the stuff we're trying to talk about?
Is that to me, Rob?
Yes, yeah, to you, Andy.
Yeah, so I was at an event yesterday, actually, and we were speaking about the protection gap, and we tend not to use it very often now because I think the calculations probably not repeated now because it's become such a big number. I think the last count, it's probably about 10 years out of date now, but it's something like 2.4 trillion pound is the protection gap. And that's equivalent to 140% of the outstanding mortgage debts. So again, such a vast number. And I think if you bring that down, it works out about £100,000 per person. So there's a big, you're right, there's a big gap, and that's a big opportunity, I think, for advisors listening today. But most people, when they take out a policy, won't need to claim. So we've done some research which we can share sort of separately with the audience, with advisors. But if we take a sample of 100 people, and in the example that we did, 10 will die before that end of that policy. So their benefit will be to their families, to their loved ones, but clearly that individual won't get any benefit. 5 will suffer a serious illness cover, which isn't covered by a critical illness plan. So we talk about 1 in 5 are not covered by a standard critical illness plan under our plan on our claims at the moment. 3 of that 100 will go on potentially to claim for a second or more time. So we pay out for repeat claims, and we believe 5 will go on to live in even longer by developing healthy habits. But the rest won't get anything from a traditional policy. So we need to create value, I think, for those clients. That's what clients expect now. They want some kind of loyalty towards a provider, any product that you're buying, and that's what we do at Vitality. And the fact that some of the data that we shared today, so we pay just marginally more in claims than we do actually in rewards and savings, and that's giving broader value to clients. And we talk a lot about, I go to a lot of industry events, and we talk a lot about added value services, and this is shared value. I mean, that's probably a better way of presenting that to a client, I think. So that's effectively what we've tried to do.
Yeah. So sort of slightly rethinking how it works. And I think an interesting thing, Debbie, you mentioned earlier on that we've been chatting about is also this idea of being, we're talking here about actually the point at which we're having a conversation with a client who's maybe willing to discuss this, thinking about it already. But I suppose the challenge we have is actually just reaching people, isn't it? And you spoke earlier about embedded insurance and this idea of actually being a bit more present where the consumer is, something that maybe traditionally our industry hasn't been great at. Can you give us a few examples of kind of that in action? I know it's something that you're very passionate about. So, what does that look like in practice?
Yeah, I think that the simplest thing, the way to describe it, is that we need to go to where the customers are, and I think we've relied too long as an industry, and the whole point about this webinar, what can protection do more of, is that we have quite a legacy model. We still rely very much on that mortgage sale as the prompt for a protection conversation. Or as Andy says, sometimes it's a bit of a fear conversation that we've done, in the past, or if the worst happens to you. And we know that doesn't really resonate for a lot of people. They discount that. They have a much more optimistic view of their life or how they could cope. So, Rob, when we talk about embedded, it's actually saying, can we work alongside brands that customers want, trust, but they're actually interacting with on a much more frequent basis? So the protection conversation becomes much more natural, and there's more value to it. They actually associate it with something else that they're trying to achieve. And at LifeSearch, it's a big focus for us. We have very much a partnership focus. How can we partner with brands that have customers that we think we have alignment in objectives, and we could help them further with protection conversations? And yes, some of those are the obvious ones. It's wealth managers, wealth advisors, because I think the one thing people will have conversations about or think about is, can they afford, their retirement? What would happen if they had to use more of their savings, or they couldn't work and they had to stop contributing to a pension pot? And I think that's when you can really bring protection in. But we also have partners such as Financial. Some people might know them. They're very active. I think just a couple of weeks ago, they were the #1 app on the American Apple Store, which was great. And they are deliberately, unapologetically speaking to females, and probably a younger demographic as well. And it's just so good to be able to be part of that community and bring the protection conversation to life there and make it real, but attach value to it. And then right almost to the other end, we work with Trinity, who deal with armed service veterans. And a lot of them come out of those services no longer having protection that they had when they were in the services, but also, unfortunately, with actually a real need, some health conditions that they want covered. And it's making sure that you're there and you're trusted, because they trust that brand of Trinity. And so it's been able to get them to trust us as well. So that's what I mean about embedded insurance. I think that we really need to look at brands and think, who should we be working with? Because, actually some of these insurance brands today that mean so much to us, I don't think they will really resonate with some of the younger customer groups coming through for us as well. So we have to look at where they are and where they're interacting.
Yeah, I love that. I think it's, as you say, it's, there's always that, there's a risk, isn't there? We're quite a traditional industry, and actually, the consumer of the future, the sort of next generation of clients that are coming through, they're engaging with stuff on TikTok, on social media. They're kind of, our world can seem a little bit separate and alien to them. And I guess, Andy, thinking about what Vitality does, we've got like life ads and stuff running at the moment, obviously a lot of sports sponsorship. I guess there's an element of that, isn't there, with what we do, being sort of present in the places where consumers are.
Yeah, so we've got a huge commitment, as many of the advisors will know and see, in sport, in terms of our branding is very visible in sport. We believe very much in the link between movement and activity linking towards healthy behaviour. So, and we then partner with best of breed organisations. I think the ECB, the English Cricket Board, is a good example of that. So we've had a long-term partnership with them, which is extended into the Blast, so the Vitality Blast. It's now known the T20 format of cricket. We've been a long-term partner of that. So we invest a lot of time and commitment and money into supporting that. And this year, and the beauty of cricket, for example, is particularly close to my heart, which is good, but it actually crosses all ages, and we're in both the male and the female format. So this year we're the title sponsor of the women's Vitality Blast. So we've matched what we've been doing in the men's format, and we've broadened that. But we've been pioneers in women's sport for many years. But we see a lot of value and a lot of benefit of being visible in that sector. And we hope very much for the advisors, there's a halo effect. So people recognise the Vitality brand, they recognise Stanley, and there's a benefit to the intermediaries in terms of their consumers, their clients understanding or recognising that brand. We're a relatively new brand, but recent research has shown that we are starting to overtake some of the more established insurance brands in the sector. And there's more we can do. It's
always, I've always sort of personally find interesting when I talk to people about working for Vitality, and it in a situation which otherwise life and health insurance wouldn't be discussed, it sort of then comes up in conversation. It's, I must look at sorting that out or something. So it can be a great way, like you say, of sort of a halo effect of hopefully raising awareness of what we do. Someone else asked the questions. This is all well and good talking about this. Obviously, we are having this conversation against a sort of increasingly quite difficult economic backdrop, and we know over the last few years that people have had tighter budgets. There's been less sort of almost a kind of view, I guess, amongst some people, some consumers, that insurance is a bit of a luxury that they can do without when times are tough. So I guess to both of you, and Debbie, I'll come to you first. How do advisors have these conversations, but sort of think about the cover they arrange for their clients when we are dealing with restricted budgets? Costs are not what they were. How do advisors kind of navigate that and come up with something for their clients in this situation?
Yeah, and it's always tricky because I think there's sometimes quite opposing schools of thoughts about, do you just start with the, what do they want and then try and get them, to agree to that's the right price to pay, or do you ask for a budget? And I've often heard the pros and cons of all that. And I think what we try and do is really start more with the needs. So really understand what are the needs and what likely is what would happen if they lost their income, which is sort of the key one. And I think with that, there is a lot of options. It does mean you might have to work a bit harder. And I could see, so one of the questions was about, well, sometimes is just a small amount of cover better than no cover at all. And I think that's what's important for an advisor to do that, to be able to work through options to get closer to something that's more affordable, but also has value for them as well. I think the worst thing is just working to a budget, because in the end, it might not attach any real value to them. But if they really understand why it was put together in that way, then I think you've better chance of that policy or policies persisting. So a couple of things is looking at actually not just going for all term assurance or all critical illness, but actually doing some partial cover on both of them. Maybe even thinking about, family income benefit as a slightly cheaper option than, a term assurance, etc. So for us, it's almost trying to make sure that you've started with that. What's your actual need, rather than trying to get a price from the very get-go and then attach affordability and value to it. I do think it's important, though, to bring customers along with the journey, that they should review this from time to time. There are inbuilt options, within these policies. Definitely, Vitality is one of them, and to say, you can start here, but as your life changes, this policy adapts with you as well. So stop thinking it's just a one and done decision. So for me, it's about affordability and value is how you try and establish the right budget for the customer.
Yeah, really good points. And Andy, from your perspective, I guess there's options now on the market, isn't there? There's a lot of choice advisors have, and there are ways of being able to offer cover at a slightly lower cost that might be aligns with someone's budget a bit more.
So I do think we need to get away from this sort of focus absolutely on price. I mean, it has to be affordable. Absolutely has to be affordable. But cheapest is really the best. And I think as an industry, historically, we've always, some of the advertising, not from Vitality, but others, is buy insurance from £1 a day or whatever it is. And I do actually think some cover is better than none. So I do fundamentally believe that. But I think the right cover is the most important thing. Mm-hmm. But it does have to be affordable. So, I don't want to get away from that. We have Optimizer as a pricing. So we do standard pricing the same as other insurers do. But effectively, and I'm not an actuary, so I probably won't explain this brilliantly, but the idea is the way in which insurance is priced typically is they look at the age of the client, they look at the health factors, etc., and then they price that and basically average that premium over the term of the policy. So if it's 25 years and you're young when you start it out, you're 25, you're less likely to die because you're a long time from that later life or whatever. And so effectively, what you're effectively doing, this is the way I see it, is you're overpaying in those early years, but you're underpaying against that average in those later years. And that doesn't seem entirely fair for those individuals who are, starting those policies at those earlier years. So what we do is, with our Optimizer price, we give you our platinum rate, and that is for me, is the true cost of your risk at that particular point in time, which, typically 25%, can be 30% cheaper than our standard rate. So what we find is the majority of our business is now written on this optimizer pricing, and we offer the standard pricing for those that want that. The optimizer pricing, the maximum increase you can get is 2%. I mean, I would accept 2% increase on all my bills at the moment. I mean, given inflation, etc. But you can actually mitigate that and get no increase through engaging. But my point really is that people that actually use optimizer as a pricing tool, it means it's more affordable, so more within wherever budget they're sitting. But actually what we find is that advisors are upselling and offering additional benefits or higher sum assureds, so meeting the actual sum assureds that the client needs in terms of family protection by using the optimizer pricing. So instead of the standard rate, they have a price that's 25%, as an example, in this example, cheaper. So they use that still to meet that original premium, but actually are buying additional benefits. And the clients are then getting the cover they need. We see that every day within Vitality communities, advisors selling Vitality.
Yeah, and I was just going to jump in there because you do make an absolute great point. I think advisors do have a lot more tools available to them to do this now. And, you know, it is talking much more about the cover and how it will work for them. I think as an industry, if we're still fixated on price in the next few years, we effectively are just an industry in decline. We're not going to go anywhere. So we absolutely have to find a way to talk about better value. And, you know, we'll come back to affordability. You can't go past that, but really to talk about the outcome. And I think this is so important, you know, if it is, you know, people haven't cottoned on to this yet, you know, this is what the FCA are asking us to think about now. It's customer outcomes at all time. So if we are still just thinking about price, then, you know, we're not onto a winner there at all.
Yeah.
We are seeing, sorry, Rob, I was just going to say, we are seeing portals now starting to include sort of quality aspects of cover, and you know, Debbie at LifeSearch is leading some of that work in some of the integration as well. So it's we're definitely moving in the right direction, I think. But I do want to make it clear it has to be affordable. I mean, that's critically important. But there are ways of actually giving people access to better premiums, but also more value, and then getting some of those rewards back. So I don't want to labour that point.
And that value point, isn't it, is increasingly sort of what we're increasingly talking about. Is traditional insurance is you pay a premium, something might happen to you in the future, you die prematurely, you get seriously ill, it pays out. That the value we're talking about increasingly, isn't it, about helping people actually avoid those things from happening, live in better health, look after their health, whether it's going for health checks, you know, getting discounted gym membership, all these sorts of things are helping people actually live in better health. So I just want to come back to, because someone's asked, Andy, and this I'll put to you. So, because you mentioned it earlier on around these sort of like four, when someone said, can you repeat the 4 conditions and a disease? I think they're referring to those sort of lifestyle factors, because that's a big part as well, isn't it, of optimizers, around this sort of idea of getting you engaged in the program. And so how do you just kind of remind people of that, Andy?
Yeah, so this was the Oxford Health Alliance published this research, and it was some time ago now, but it's still absolutely relevant. So they spoke about 4 activities. The first one was exercise and movement, diet, so poor diet, smoking, and then they included the 4th one, which was alcohol. So exercise, diet, smoking, and alcohol lead to 4 major diseases. And that is heart disease, respiratory disease, diabetes, and cancer. And those 4 diseases lead to 60% of deaths worldwide. Before they included alcohol, it was 50%, but they've included alcohol now, and that includes, so that takes up to 60% of deaths worldwide. And the point of that is that those are all modifiable behaviours. Now, we can't change everything. We absolutely accept that, but we can all, if we choose to do so, exercise a little bit more. You know, can we walk to the shops rather than taking the car if it's local? Can we, you know, walk the dog? Can we walk between tube stops? Can we walk to work? Those sort of things. So can we just exercise a little bit more? And we see that the government are promoting that more. It's in many of the newspapers, etc. Eating a balanced diet, you know, everything in moderation is fine, but eating a balanced diet is something that we all know and we do. I mean, there's a reason we don't give our children ice creams and crisps and McDonald's. I mean, I love all of those things actually, but we don't give all the children all of those things because the long-term impact is bad. So improving your diet is good. Smoking, I mean, you know, if you're a smoker, many people do want to quit smoking. We offer programs to support that, but smoking is obviously a clear barrier to poor health. And then the last one is alcohol. And I think they do make the point there is about everything in moderation. So all of those activities are modifiable. We can change those, and Vitality exists to help individuals and members and clients actually choose what they want to do. No compulsion, but clearly we want them to do that.
Yeah,
but that's
I love that sort of shifting it. Yeah, I like that sort of shifting it away. And actually, I think there's a nice point to be made there. Actually, if we're shifting the conversation on something positive, you know, maintaining your health and well-being, actually, there's an opportunity there to maybe have slightly better conversations with clients. I'm just conscious of time, and there's a couple more questions I just want to ask. So, Debbie, I'm going to come to you, just continuing with this kind of health theme, but looking at it from a slightly different angle. Somebody's asked around underwriting, which is obviously a big sort of challenge for our industry. So, and they've asked what are the ways that AI is impacting underwriting. So, perhaps you can give us some thoughts on that.
Okay. Well, I'd say it's not. It should be. I just don't think we're even at the foothills of using AI in underwriting in a way we could at the moment. As our industry, we spent the last few decades taking the traditional process and automating some of it, so the rules engine, the straight through processing. But we're still very much applying the same techniques to try and detect anti-selection or to try and get a better view of their health than we have for decades. And I think AI and access to better data now, and actually, you know, what Vitality learn from their customers and customers are willing to share, really gives us a huge opportunity. In the time we have, I'd like to see much more predictive use of AI, so we don't put everyone down the same funnel, you know, just one size fits all. We get better at spotting who we should perhaps ask more questions of and who we should just let go through, and using other data points that we know of them to actually get a better price. And I think some of the questions today were about a much more simplified process, maybe some guaranteed acceptance. And I'd like to think if we were using AI and data in that way, we would be much more confident as an industry to do that, rather than what we do at the moment is we ask questions, don't quite trust what a customer has said to us, and then we do our own checking as well. And I think that absolutely has to change.
Yeah, I know AI is an area that we've been looking at within Vitality as well. So I think, as you say, there's lots of opportunity here. But we're running out of time. I just want to, again, I'm just going to come to you, Debbie, just to kind of finish things off here, because obviously the big bit of work that's kind of coming down the track that hopefully people are aware of is this kind of FCA market review, which, you know, could have implications given what we're talking about here today. So perhaps just to kind of finish things off, Debbie, you could just give us a little bit of a, you know, where are we with the FCA market review? What are your kind of expectations and what that's likely to do and the impact?
I think, you know, very quickly, we know the FCA have published a terms of reference to look at the protection market. Very much it's about how the market functions, how do we serve customers, you know, are we doing the right thing, outcomes. But I think what is also important is that doing a data gathering exercise at the moment. LifeSearch is part of that. We're helping them with that. And I've been quite encouraged by, yes, they're asking about businesses and products and what we do and volume, but they're also asking questions of us about saying, what will it take to grow this market? You know, what's been your concerns about the market? But actually also what the ambitions for the market and what could we do more of? So I think it's great. It comes right back to this webinar. What could protection do more of? And sometimes you be careful what you wish for. You know, you have got the regulator looking at you, but I think this is also a regulator that's had very clear, you know, instructions from the government about growth. And that's absolutely what we need. So if there's a way that we can help influence the conversation with the regulator now for protection, I think it's got to be seen as a good thing.
Yeah, because we were talking earlier about the latest ABI data, and you made the point that we are, as an industry, we are doing a huge amount of good.
Yeah, the latest data, we're paying out 20 million a day, so if the government, saw that as the key role we play in society, it's huge. And I just don't think we get that visibility as a sector, protection. So absolutely vital. Yeah.
Well, look, we could speak for hours on this. Unfortunately, we have ran out of time. To anyone who's asked a question that we've not been able to answer, sorry we couldn't get to all of them. We'll definitely follow up on any kind of comments and questions that you've shared that we've not had a chance to answer today. Our life claims and shared value report will be going live imminently. There's a link in the handout section on the webinar. You'll notice it says coming soon. It is about to go live imminently, so just bookmark the link or just keep that open, and that should be available very shortly. And you'll see in there all of our latest claims and value data, just sort of speaking to some of the themes we've been talking about today. We'll issue CPD certificates as well after the session, so keep an eye out for those, and share a recording of the full webinar. So if you want to watch it back or pass it on to any of your colleagues or peers, then please definitely feel free to do so. So it just leaves me to thank Andy and Debbie. Thank you so much for joining us today. A fantastic discussion, lots that we could have spoken about, but hopefully everyone's found that really interesting. And once again, thank you so much for joining us today. So I hope everybody has a lovely day and a good rest of their week. Thanks again for joining us.
Thank you.
Bye-bye.
Thank you. Thank you.